Well, hello, this is Jeremy North with your educational and economic update for September of 2022. In this month's video, I will discuss major headlines that influenced markets in August and economic and market events that we're looking at to influence September and future returns. Please stay tuned at the end of the video for our always exciting required disclosure statement. Well, August markets reversed the gains we saw in July as every major domestic index was negative. 10-year treasuries advanced slightly, but even gold, oil, and retail gasoline added more declines from July's numbers. The S&P 500 was down 4.4%. The NASDAQ, the tech-heavy index, was down 6.5%, and the Dow Jones was negative 3.6%. The major bond index lost 3.2%, while 30-year treasuries were down 4.7%. The market's decline came after Federal Reserve Chairman Jerome Powell said the U.S. Central Bank would need to keep monetary policy tight for some time in order to tame the increased inflationary trend. This really squelched the market's hope that further interest rates rises would be more modest and led to a sharp fall in share prices as well as volatile trading throughout the entire month. Also in August, U.S. Congress passed the Inflation Reduction Act, which aims to reduce inflation by curbing the deficit as well as investing in domestic sources of clean energy. Hiring slowed down in August, but remained pretty strong as 315,000 jobs were added, even with lower consumer spending, rising rates, and slowing economy. The unemployment rate rose slightly from 3.5 to 3.7% in August, according to the Labor Department. But economists feel that this is likely because the number of people looking for work and those working rose by 800,000. The labor market is still very strong as all of the jobs lost during the pandemic, around 22 million of them, have finally been recovered. Markets are recovering some of the August losses during this first week in September. There are many that believe that the Fed will be able to contain inflation, hopefully without causing too much pain, although we are technically already in a recession since we had 2 straight quarters of negative GDP growth. It also appears that the war may have turned in Ukraine's favor over the past couple weeks. This is very important to the fortunes of most Europeans in the upcoming cold winter season. We hopefully have seen the bottom of this dire situation in Ukraine, which, if true, is a very positive thing for the global economy. On Tuesday, September 13th, the CPI report for August is being announced. June's 42-year high inflation number of 9.1% year over year, followed by July's slight pullback to 8.5%, are expected to be followed by a further reduction to 8.0% for the August number. If this is indeed the case, we may have seen the peak of inflation, and markets could react favorably to that. With that being said, even this rosy outlook for inflation may not be enough to curb the Fed's expected 75 basis point increase in short-term interest rates, which is slated for next week. This past Friday, September 9th, the S&P 500, NASDAQ, and the New York Stock Exchange indexes, all three had up days, which are referred to as a 90% upside day. This occurs when at least 90% of the stocks in an index are positive on the day, and 90% of the trading volume is also positive. Now, this is statistically meaningful as it has historically pointed to better markets ahead, especially when the broad market is trading below its 200-day moving average, which it is now. Looking back since December of 2002, there have been 27 times these three indexes all had 90% upside days while the S&P 500 was below its 200-day moving average. In every case, the S&P 500 was up 6 months and a year later. The average return 3 months later was 9.8%, 6 months later was 19.7%, and 1 year later up 29%. This is one reason to be optimistic that the markets may be turning around. Remember that we are here to help. As always, we are diligently assessing the economic and political implications for your portfolio. Should you have any concerns or questions, or would like to discuss your personal situation, please give us a call. With all that being said, here's the disclosure I am required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. This is Jeremy Norris signing out for the month of September. Thanks again. I hope you have a wonderful start to your fall season, and I will see you next month. Take care. Bye.